It is time, guys. Welcome to the Whissel Way podcast. My name is Kyle Whissel with Whissel Realty Group, joined as always by Mr. Jason Hall with Team Home Loans. Jason, we're going to turn a lot of the attention on today's show to you because there's been a lot happening in the last week when it comes to the mortgage industry. For those of you that are realtors, you're listening to the show, you know the market has been changing. We're literally starting to do events called the Gift of the Shift because there is a shift happening in the real estate industry right now. You're starting to see a lot more homes coming on the market. You're starting to see that inventory grow. It's taking a little bit longer for homes to sell. Interest rates have been, going up and up over the last year or two. And so the government has a little bit of control over what happens in the real estate market, right? There's a couple things that have changed in the last week in particular. So Jason, kind of get us up to speed on that.
Yeah, so a couple things. So the government has pretty much taken over Fannie Mae and Freddie Mac during the crisis that we went through, the 2008 through 2011 timeframe, and they've always helped control loan limits and kind of setting the conforming loan limits, or what we now refer to the high balance in the higher county areas like San Diego, LA, Frisco. And, every year they look at, hey, what's the average sales price? What's going on? Do we need to raise loan limits, keep them the same? And there for a while, it was the same during the downturn. In the last few years, they've been raising those limits up. Well, currently, as of right now, the conforming high balance loan limit for San Diego County, where most of us are located, is been $649,750 for this past year. Well, we just found out this week they're raising it up to $690,000. That's a $40,000 increase for San Diego County. And what's great about that program is the Fannie Mae program is much more flexible when it comes to credit, debt to income ratios, reserves. And what reserves, of course, are is, meaning you have money in the bank saved after all your down payment, your closing cost. A lot of your jumbo lenders out there want you to have 6, 12 months, 24 months of reserves, where a lot of people buying in this 650 to 800 range haven't had, a ton of reserves because they're young. It takes a lot to buy. It takes a lot to rent. And, that's slowed down some of the buying in that price range. And with Fannie Mae now raising that, a lot of lenders are taking that effect right away. Definitely will go into effect for January 1st for all lenders, but a lot of them already taken that into impact. It's going to be huge. That's going to help a lot more people get in. It includes FHA, includes VA. Everything's gone up. And so it's going to help people get in. And it's still a good loan, meaning they're underwriting the loan. It's not like you just breathe. Kyle, we've talked about this in the past when you and I first met. I could get anybody a loan. Right?
You literally got me loans for breathing onto a mirror and fogging it.
Yeah.
I remember it.
Yeah. And now
I thought it was weird. Normally you sign, but you just put a mirror under my nose. I thought it was super awkward.
Yeah, super awkward. But I tell people, look, they go, well, I'm afraid the government's making it easy. And it's like, no, they're not. It's still difficult to get a loan. It's not just anybody gets a loan. You still got to have a job. You got to have credit. It's got to make sense. But the Fannie Mae loan is one of the easier loans to get, along with FHA and VA, versus a jumbo and jumbo bank. Now, what's also unique is the jumbo rates are actually a little bit less than our Fannie rates, because now that the government's in, they've added all this additional cost so the government can get, paid for, insured and using stuff. And that's a whole nother topic I could, get into. But everybody wants the low rate, but a lot of people don't have those higher reserves, those higher credit scores, those lower debt to income ratios. So I'm excited about the loan limits.
All right. So that's first. Loan limits have increased, which for loan types that are easier to qualify for, now you can go a little bit higher on the price. So that's a good thing. And now there's a second thing that happened this week. So get us up to speed on that.
Yeah. So the second thing that happened this week is on Wednesday morning, Fed Chairman Powell came out and their take on rates has been for the last year, year and a half, the economy's great. We're going to raise rates. We're going to continue to raise rates in 2019. We're going to do all this stuff. And they literally came out on Wednesday the 28th and said, hey, we're now not as bullish on increasing rates. We're starting to see a slowdown, in the world economy, definitely starting to see stuff in the United States economy. And they're now taking, hey, we're probably going to raise maybe just 0.25% here in December. And we're probably not going to raise early in 2019 because we start to forecast and see things. Now, I'm a conservative. I did vote for Trump over Clinton, And Trump's been pounding it for a year. What are you guys doing raising rates? He has not wanted rates raised at all for the past year. And he's been screaming, stop, 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 because he could see a forecast of, if you keep raising the rates, it's going to hurt the economy. We don't want to hurt the economy as we're coming out of some tough times. And any sitting president wants everything to be great when they're the president. So it's kind of interesting that now, Fed Chairman Powell has, come out on Wednesday saying, hey, look, we're going to slow down. The stock market went up 500 points. Rates actually went down. This rarely happens together, Kyle. Typically, when stock markets go up, we see rates go up. When the stock market goes down, we see rates go down. But, on that Wednesday, 500 points up on the stock market and rates improved.
At this second, it is up 617.7 points right now. That is massive.
617, right? And
that's a big day.
Yeah, and we closed. That should be the closing, up 617.
Yeah, that's powerful. So we've got two things at play here. We've got loan limits going up, and we've got interest rates that were projected to continue to increase, maybe not happening so much anymore. So what does that mean for us as realtors, as mortgage professionals? What does that mean for us? Well, that means that the direction we've been headed, which has been inventory growing like crazy, a big part of the reason the inventory has been growing is that your move-up buyer market has been hit pretty hard. The primary reason being the interest rates. Because if somebody got a loan 3, 4, 5 years ago, most likely they've got a loan in the threes.
Yeah, definitely low fours.
Worst case, low fours.
Right.
The rate, maybe not today, but a week ago, the rates were around 5.
Yeah.
Right? So it's hard when you go to sell a home for, let's say, $400,000 and then go buy a home for $600,000. $200,000 difference doesn't seem that big.
But when you're talking about a percent and a half on the interest rate,
you throw on a 2% higher interest rate, that's a significant jump. So what's only a 50% increase in price becomes, a 75, 80% increase in mortgage payment.
Right.
So that has been one of the things that's been holding the market back a little bit, is the rates had already shot up and then projected to continue to shoot up. That definitely, has been part of the reason that the market's been struggling a little bit and why you've seen the inventory increasing. So I'm actually really excited for this, for the market, because I think that this can calm people a little bit, because people freak out, right? And they freak out about what is forecasted to happen before it actually happens. And this is why you don't want to freak out over things, because it's projected. A projection is purely a projection. It's like a hypothesis, an educated guess. Nothing is set in stone that rates were going to go up. So people kind of freaked out that rates are going to go up. Oh my God, this is going to screw the market, or what are we going to do? But now maybe the rates aren't going to go up. I would imagine with the Fed coming out and saying that today, I don't know if you've looked at your rate sheets today, but I've got to imagine rates
we're starting to see slight improvements already.
Have pulled back a little bit, right?
Yeah, they're coming down already. We've already seen improvements during the day, which is nice to see. And I think as this thing continues to hold, as we get other economic updates during the next month here in December, I think we will see rates continue to slide back down.
Because what ends up happening with mortgage rates is they're projecting, they kind of adjust the rates based on what the projection is, right? So if they believe the Fed's going to raise rates, mortgage rates tend to rise in anticipation of the Fed raising rates. And when they anticipate that and the Fed does not raise rates, there's typically a pullback on the mortgage rates. And so I'm pretty excited about this. I'm not going to lie to you, because there's been so much out there and a lot of fear in the market right now. And this is something that I think the market needs, both for us as real estate and mortgage professionals and for the consumer out there, to understand that, hey, it's okay. Rates aren't going to go to 10% in the next year, right? I mean, there's people that are fear mongering and putting that out there. So I'm excited about that. And I'm excited about the fact that the loan limits are increasing, because the qualifications for a jumbo loan are really tough.
Yep.
Right? I mean, what is 6 months reserves typically?
Minimum
6 months
and
reserves.
Usually more.
And how many people have, let's say you got a $5,000 mortgage payment. How many people are going to have $30,000 left over after their 20% down payment, right? How many people have that? It's so rare. So both of these things are things that if you're a real estate agent, if you're a lender, or if you're thinking about buying or selling a home, this should give you a little bit of optimism, for the direction that we're headed, because there's been so much pessimism about the market and the direction that it's headed because of the projections of what's out there. But this is going to change things.
It's going to change things because you hit it right there. Move-up buyers have been halting, and we need move-up buyers because move-up buyers free up their homes, which is kind of the beginning inventory for most first-time home buyers. And we don't see builders out there building first-time home buyer, homes, definitely not in Southern California. So this is huge. It's going to create more inventory. It's going to help, the economy. And as you and I know, as real estate goes, the economy always goes.
Right.
So I'm looking for positive signs. We're excited about it. It's going to kick off for 2019. Thanks for having me on the show again.
Yeah. And if you're listening to the podcast and you are a realtor or a mortgage professional, your job is to take this information and control the narrative of what's out there, because the typical media, the news, pull up CNN.com right now, and I guarantee you 80% of the stories are going to be negative. It's your job as the professional to control that narrative. So you need to get this message out there, because all the media is going to do is latch on to the fact that the inventory here in San Diego increased 42% from a year ago. They're going to latch onto that. They're not going to talk about the fact, even though it's gone up 42%, there's only 2.7 months of inventory. A normal balanced market is 6 months of inventory. They're not talking about the fact we still have half the inventory we have in a balanced market. They're just latching onto that 42% increase because that's scary and that gets clicks and views. So your job is to control that narrative above and beyond what the media is doing. Let people know this is awesome news. This is optimism. It's your job. Control the narrative. That is your message for the day here on the Whissel Way podcast. I want to thank you so much for tuning in. If you want to stay up to date with what we've got going on at the Whissel Realty Group, we've got a group on Facebook. It's called The Whissel Way, conveniently, same name as the podcast. We'd love to get you connected on there. We're sharing all kinds of tips and tricks and things that we're doing at our office to help grow. And again, whether you're in real estate, mortgage, or just a general business professional, there's going to be a lot of opportunity for you to learn and connect in there. I want to thank you so much for tuning into The Whissel Way. We'll talk to you next week.